Significantly see people starting to get angry, and then they end up selling more, and you see these kind of flash crashes in cryptocurrency. Right. It takes time. You know, it's like a child, right? So Bitcoin, you could argue that was a toddler, then it's an adolescent, then it has to grow into an adult. And so eventually, yes, I see it being the future. But, I'm probably one of the only people here that thinks price is going lower, before it goes higher. Pretty much the same stuff. You know, for the most part, when it comes to stocks, most of my money is in stocks still. And the reason I do that is because there's more opportunities for a swing trader, right? So a swing trader wants to be in and be out relatively quickly. With stocks, you have stocks that are going up on earnings, down on bad news. You get a lot more opportunities. With crypto, it's a little harder to find that because everything trades mostly along Bitcoin's lines, right? So if Bitcoin's down big on the day, it's very rare to find a cryptocurrency that's a big one that's going to be up in counter trends. So for the most part, I trade the same indicators, but it's just different amounts of. I still use like the 200 is what Bitcoin just hit recently, and it pulled back beautifully off of it. That was around 48,250, and it pulled back. And I do use the 200 on stocks, but there's a difference, right? So you have to understand that cryptocurrencies have a much bigger volatility factor than most stocks. Like, even though market cap wise, you could say, okay, well, Bitcoin is an Apple or a Microsoft, or obviously a little bit smaller in market cap, but you don't see flushes overnight in Microsoft that drop 20%. And you can see that in Bitcoin. So as a trader, I have to be fully aware of that and play it differently, slightly differently. Is that when you're looking at a moving average, for instance, and I'll just use a moving average as a general, you know, marker point, is that Bitcoin is going to mark the 200, and it's taking into account those volatile moves all the way along. So a stock would not have that. So you actually have very similar things. And remember, charts are representations of human emotion, right? So when you have a buyer and a seller, they're creating upticks and downticks in a chart. So really, when you're trading stocks, you're trading emotion. You're trading human emotion of greed and fear, which makes it almost perfect for us just recognizing, shutting everything else out, and then just looking at the charts. And again, you know, I've gone on record with you in Dubai, right, when we were at 65,000, and I said this isn't a breakout. And the charts were telling me that, right? Everyone else said it was going to go to 100,000 in a month. And the same thing recently at 48,250, we hit major resistance. I recognize that. And again, that means Bitcoin is likely going to pull back. So it's really the same because you're trading human nature, right? So again, what makes you angry, right? What makes you angry probably makes the same other people angry. And you're going to react the same way, just like me.
Losing money makes me angry.
That's what it is, right? Which is why when things drop significantly, you see people starting to get angry, and then they end up selling more, and you see these kind of flash crashes in cryptocurrency. At 40,000 again, if you're a quick trader, you can jump in at 40,000 and play it maybe for like a $3,000 or $4,000 bounce. I would say this: what is your time horizon? What are you looking to do? Are you willing to be in and be out quickly, or are you looking to hold something for months? Cash, and you're willing to swing trade it. Start looking at 40,000 as a floor. If it breaks 40,000, you have some downside, but for the most part, I would expect support at 40,000 and a bounce back to about 44 to 45,000. So I think you can look for that. Now, just be ready. Remember, as a swing trader, you can't kind of just say, well, if it doesn't happen, I'm just going to ignore. You have to be ready to act. So that would be my... It's going to 20,000.
I'm being greedy here because I'm trading crypto.
Well, and you can't be greedy in this scenario, and I'll tell you why. Is because ultimately the bear flag is in the chart. All right, you have a major cycle top here. You have all the makings of downside price action. The fact that we even fell off the 200 moving average and stayed within the channel that we talked about before tells you that everything on the bearish case for the midterm is intact. So again, if you're willing to be in and be out for 10%, then be ready to deal with that. If not, I would say sit on the sidelines. You'll get a much, much better entry when you break down and go 20 or sub 20,000. It's important for everyone watching to understand that if you're a long-term believer and not a swing trader, there's nothing wrong with dollar cost averaging in, right? I mean, if you pay here at 43,000 where we are now, and it goes down to 40, you could buy a little bit more if it goes to 35, and just continue to do so over the course of that period, since ultimately I do believe it's going to 100, 500,000 and even more down the road. And again, I think that's years away, but I do think it is heading there. So in that respect, if you're not willing to swing trade, I would just keep that in cash, keep it in kind of reserve, and then hold what you're hodling right now. Two things I hate the most is being down on a trade. So if I buy it, let's say 40 and it goes to 20, that's going to bug the hell out of me. The second thing I hate is time, right? Time is money. So for me personally, because I'm a trader, because I know how to read the charts, I'm aware that it doesn't make sense for me to kind of just sit in something for, let's say, 2 years before I come back in the money and start seeing that move to 500,000, because I can trade in and out 10 million times, not 10 million times, but I can trade in and out multiple times and make up way more money in the near term. So for me, it's just my style, and I think each individual investor needs to decide what is their style. Do they know enough? Like you said, you're not a trader. You might follow me a little bit, but for the most part, I think hodling a little bit is fine. Just very near-term bounces.
Medium term then.
Medium term is 20 or sub 20,000 still.
Okay,
and I've been consistent. I think in Dubai is when I first unveiled that price target to you, and I stick with it because the charts haven't changed. Now, I do want to be clear, the charts can change, right? I have to be someone who can admit when things change. So far they haven't, but I will absolutely come back on with you and be like, all right, they've changed. So we basically, from the November high, you have this vertical kind of drop all the way down. And then since I think it's been the last 2 to 3 months, since January, we've been chopping sideways to slightly up. And if you connect the highs and the lows, they form this perfectly parallel kind of channel. As long as price is inside of that, it's classified as a bear flag, and the expectation is that it would break lower, right? So now if we get above that channel and establish ourselves above that channel, that would be where I would start to say, okay, are things changing here? Now, maybe they don't, but I have to at least ask myself that question. Midterm is like 3 to 6 months out there. If you look at past Bitcoin cycles, it tends to bottom between 12 and 18 months since the previous high. So you're talking November to maybe early 2023.
Right.
But I think it's important to recognize that if you map this out to the dot-coms and Amazon hit a high of 112 in 2000 and a $6 when the dot-coms busted. Where is it now? You know, 3,300, 3,400. So $6 to $3,400. That's in 20 years. I mean, think about what Bitcoin would do. Let's say Bitcoin bottoms out at even $10,000. Then multiply that out where Bitcoin could be if it follows the same thing. Basically, what I'm doing is that every time you have these little, so we're in this range, right? It's kind of an upsloping channel here. And as you jump up, you're kind of going a little bit here, then you're jumping up. And what it's doing is it's creating little pivot points, little areas where it kind of pulled back to and then jumped. Those create new support areas for us. So the band is the band. That's like the major level. So the 48,000-ish level to about, I think it's around 36 or 37. Those are the major bands. Inside of a band, you get lots of trading opportunities. Otherwise, I wouldn't have done any trades if it wasn't. I've done a bunch of trades since January if there were no trades inside of that. But my job is to get people opportunities, both long and short, and I've been able to do that with Pivot about a year or so. As long as it stays above that, it's safe. I do worry about Ethereum breaking that line, but I don't think people need to be concerned until it happens. Solana is one that's interesting. It had a big pop recently. It's pulling back. I do have a buy level on it. I can't recall what level that is, but I will definitely mark that for our next intro. My biggest concern with Ethereum is that it could be jostled out of the top lead by another cryptocurrency. I think Bitcoin remains the biggest, and it will be for some time because it's becoming the digital gold, right? So you're seeing, the likes of Michael Saylor, you're seeing the likes of so many big players getting in and basically saying this. While Ethereum has a huge amount of use case, what's to make Solana not take over? What's to make, Avalanche? Or is there one that we don't even know of yet that could take over? And that means that when I'm investing in it, I'm going to do slightly less money in Ethereum when I go long because of that risk.